Morning, everyone. This is Rajendran here, joining from Market Calls, and along with me, Mr. Vinod is also there from Bell TPO and Converge 2020 organizer. So, what I am going to discuss in today's session is that I'm going to discuss about some of the basics of order flow, especially for the people who are very, very new to order flow and how to read the order flow charts and some of the basic terminologies of order flow charts. And right now, what is happening in the order flow? I'm going to take some of the live charts and then I'm going to explain what is happening at this point of time in the markets. So, before I'm starting with the session, let me hand over the session to Mr. Vinod. He has some few words to say about Converge 2020. Yes, Vinod.
Yeah, thank you, and very good morning to you all. Warm regards. Of course, Converge 2020. It's been a very prestigious event as far as the program is concerned. Mainly, meant for mentors where they wanted to have a platform, to spread the knowledge of market profile and order flow. And it's been almost 4 years of journey, and this is one of the fifth consecutive event, and there's a massive response since this time we have gone. We decided to do it as a virtual conference, and there's been a tremendous response from most of our traders. And thanks to one and all who have already registered for the event. And of course, we've been getting some queries. The mailers have already been sent to all those people who have registered. And if in case if you have not got any messages, you can get in touch with the chat support, which is available on the Bell TPO. Bell TPO website or the Convergemeet website. As I told you, we've been working or thriving to spread the knowledge of market profile or order flow. The concepts are really amazing, and we can really shape up or build the career using these concepts, and that's what we could understand. And of course, we are very delighted to have mentors on board like Mr. Rajendra and Dean, who have immense experience and the knowledge of market profile and order flow. Of course, friends, this is one of the preview webinar series, where we have been doing this fourth consecutive webinar series. The kind of commitment what you can expect from the mentors is immense. Because we wanted to make the traders understand what exactly is going to be discussed in the Converge event, and to get the hint of that, we have decided to do a webinar series. So there are other three webinar series which is there on this Convergemeet website, which is in front of your screen. So you can visit there, and for the password, of course, you can chat with our chat support. um, to get the passwords. So the last three series have already been uploaded, and you can see them here. This particular ongoing webinar will also be uploaded on the same site, and the same password holds good for all the webinars, the preview webinars. Of course, friends, tomorrow our mentors would be starting up the basics of the sessions, basics of market profile and order flow and VSA concepts. So Converge is an event, where it always takes care of even the beginners too, because we strongly believe that uh, you need to have some basic knowledge before entering the actual sessions. So it's been a practice in the Converge that the mentors always take up the pre-Converge sessions, much before the actual live, the Converge session starts. So in fact, the decision taken was initially to provide the recorded versions. Then the mentors decided that no, we'll do a live webinar, and later those who miss out to those sessions will provide a recording. And yes, we also get queries from other countries due to the time zone variation. They are not able to attend. Friends, yes, not to get disappointed, this time we would be giving you the recorded version access too. right? So that addresses the queries, right? And as far as the pricing is concerned, friends, you know, we had an early bird offer at a 5,000 price tag, and now the prices are 7,500. But yes, for all those people who are attending this preview webinar, we didn't want to disappoint you guys. So you can use the discount code. Mr. Rajendran, can you just share the discount slide? Yes, friends. So for all those people who are attending this preview webinar, you can enjoy the benefit of rupees 2,500 rupees as a discount. The discount code would be MCFeb 2020, right, friends? MCFeb 2020. And of course, this particular webinar, Mr. Rajendran would be making it live under Premier section in his YouTube channel too. And the same discount code can be found in his description, YouTube description as well. Okay. So, and I hope to see you all at a Converge event. Once again, thank you very much, Mr. Rajendran,
Yeah.
for giving us this opportunity.
Thank you,
All
Vinod.
the best, friends. Thank you.
So we'll kickstart with some of the basics of order flow. And prior to that, a little bit about me. My name is Rajendran, right? I'm the founder of Market Calls and co-founder of Algo Mojo. I'm a full-time equity and index derivative trader. I predominantly trade most of my trades are in derivative segments, and I've been trading in the market since 2006 onwards. Probably this is my 14th year in the markets, and I've been also an algo system developer as well. And last 8 years, I've been mostly involved in discretionary trading and market profile and order flow analytics. And predominantly, I also train traders on market profile and order flow as well. So, in today's discussion, we're going to get to the basics of order flow. So, if you are not heard about order flow for the very first time, so let me tell you, order flow is one way of looking into the price information. But order flow provides the true information about the buyers and sellers, right? So it is also one form of like candlestick studies or renko or point and figure. Order flow is also a visualization techniques, but order flow here, it talks only about the buyers and sellers. Other candlesticks, it talks about patterns. Here also we have a price based patterns over here, right? So but order flow, what it gives you is that it gives you an immense idea about what is actually happening in the markets. It is a tool to study the buyers and sellers behavior, and you can take advantage of those behaviors in real time, and you can use it for scalping the markets, scalping or intraday trading. So primarily order flow is used for very short term trades. So if you want to know what is happening right now in the markets, right? If you want to know whether in the next 10 minutes or next 15 minutes, what could be the behavior? Or if you want to know next 30 minutes or next 1 hour, how the market can move and where I can take my tighter stop loss. So order flow is the only tool it helps traders to take advantage of such kind of minute price actions. Why I am saying here is that because you need to have a fair idea what is happening right now. Only if you know what is happening right now, then only you can predict what can happen without knowing what is happening right now, right? So I believe I strongly don't believe like you cannot make a prediction for the next 10 minutes or next 30 minutes or next 45 minutes. So especially market profile is one of the best tool you can combine with order flow. However, you can also combine with price action as well. So many traders who are price action traders, they had benefited a lot from using the order flow because price action is more of a theoretical concept, but in order flow, you can visualize those price action in real time and you can check out whether the absorption, initiation, everything is happening or not, where exactly it is happening. To put it in a nutshell, right? So order flow is a kind of an you can use it uh, like an you can look into the inside the candlestick and like a microscope. Order flow functions like a microscope, and you can look inside the candles to see inside the candles how the buyers and sellers are behaving. Now, the concept of order flow itself, it has been arrived from 2001 onwards. And there are not much of a books for order flow, and it's a highly modern concept. And many people are doing experiment on their own side. However, the basic order flow concepts has been now one of the biggest dominant factor for the institutional traders as well. Not only the institutional traders, high frequency traders, everyone uses the order flow because they are the one who generates those order flow. Order flow itself a study about the buyers and sellers orders. When I talk about buy orders and sell orders, I'm talking about market orders. However, on the screen right now, what you're watching is the market depth. Mostly, you would have seen in your broker's terminal, the brokers provides up to 5 depth of market orders. I mean, limit orders. They are nothing but limit orders. Limit orders means they are waiting for the fill. They are not going to move the markets. What moves the market is that the order which is coming from the buyer, if it is the market order, that will move the price up. That is what we call it as an uptick. And down tick is nothing but which pushes the price down, and that is more often sellers who are pushing the price down. So when the price is going up, right? So who is buying? So buyers are buying. Who is on the opposite side? Some limit orders are on the opposite side who don't have any control in moving the markets. Likewise, the during the downtick, sellers pushes the price down. Now these players, the market order players, we call them as what? We call them as an aggressive players. Whereas limit orders, probably we can call them as an passive players. They don't participate in the markets in moving, but they contribute in controlling the velocity of the price. Okay. So what market order does is that they take the liquidity from the markets, and what limit order does is that they supply liquidity to the markets. Okay. So whatever the numbers we are seeing, these ticking numbers, they are nothing but these are liquidity. This is what we can call it as a liquidity. If the liquidity is high, price cannot travel faster. Price has to travel slower. If the liquidity is low, then faster the aggressive players can take advantage of the markets. Now we talked about aggressive traders, right? So aggressive traders who punch the markets, they move the markets. We know that. So what you are seeing in the market depth is nothing but the representation of the order book. Let me tell you one thing, whatever you're seeing on the order flow. So I guess if you haven't seen the order flow charts, whatever you're seeing are nothing but the executed market orders. And whatever you're seeing in the order book is nothing but the pending limit orders. Okay, so many people, they have a confusion most of the times. What is the difference between order flow and order book? Very simple. Order flow always shows the executed transactions. If it is executed by the buyers, you'll be seeing on the buying side, which is on the right hand side. If you are seeing any execution on the left hand side, those are mostly made by the sellers. So here in this picture, you are seeing the picture snapshot has been taken around 9:45. This is today's activity. You're able to see the activity of the buyers and sellers. Maybe I can do one thing. I can show you the live example here. Right now, what is happening? This is a right now what is happening here. You could see there are many modes are here. One of the mode I'm going to use is the bid and ask mode. Right. So this is for learning purpose. The green color ones are the buyers and the red color ones are the sellers, executed sellers. See that price pushes the price up, the number of lot size are getting increased. All these numbers are in lot size. So what I had done, I right click, I'll go to the indicators. Oops, I right click and I'll go to the indicators. Now, from the indicators, there is a provision to reduce it to lot size. Otherwise, by default, if you apply, if the lot size is 1, you will get to know the total number of shares. In my case, I kept it 75, which is the lot size for Nifty. So here you can see how the transaction is happening. If the price goes up, it adds up to the buyers. If the price comes down, it adds up to the seller's block. Now, each and every block is like 2 points. In a high volatile markets, we prefer to use an 2 points bricks. Means each and every 2 points, you will be having a rectangular box which will be collecting the number of trades happened within that block. We can also call it as a TPOs, right? So if you are a market profile user, we call it as in terms of TPOs. Probably if you are using order flow concepts, then we can even call it as a bricks, or we can call it as a bins. So look at the price action here as the prices keep on moving up. So what you're seeing here is nothing but a 5-minute candle. So inside the 5-minute candle, you are able to see the buyers and sellers at each and every price level. So the center point, you are seeing a stuffed candle inside. All right. So you can see that 42 means 42 lots got traded at those levels only from the buyers. Buyers are the one who is taking control over here. If the price slides down, you could see the selling activity is getting increased. 39 lots is getting increased over here. Now, why we need to observe this kind of price action is that more closer you're going to observe, more interesting trading strategies you will be able to generate, that too with a very tight and very good risk management system. One can practice order flow, especially if you are a user with market profile. At times you want to get the finest trading opportunities and you want to fine tune your trading opportunities using order flow. Order flow will be one of the helpful supportive tool, especially for the traders who are taking market profile based trading decisions. You can also use order flow as a standalone tool as well, right? So there are many cases I had used order flow as a standalone tool to take a trading judgment, generally to look for 15 or 25 points of trading opportunity in Nifty, something like that. Or there are many cases I had combined with market profile and I had taken trading opportunity, especially when breakout failures are very common in the markets, especially this series, right? This series, December series itself, almost 2 to 3 breakout failures has been seen in Nifty, Bank Nifty. So those are the places order flow comes as a very critical tool to understand. And whenever such kind of big quantities, right now a big quantity is getting punched 664, suddenly a big players are coming and buying. So you have a better visualization what the big quantity, why these big quantity is getting punched, how the flow is looking like. So here again there is a 709. Probably you can see spot and bigger quantity over here. So there are two places I'm able to spot a bigger quantity. So this is one and another place over here. So two big quantity got traded. So there are places you can identify the patterns of those big players, how the big players are coming and playing, and what is the importance of those things. You will be able to calibrate those kind of trading setups immediately, and which is highly important to track the order flow, especially if you are trading for a very short term, right? You need to know what kind of day it is and what kind of players you're competing with. Are you competing with big players or are you competing with small traders? What kind of zone you are in, whether absorption is happening or whether initiation is happening. So too many things you have to track it over here, and order flow gives you an one stop to monitor everything at one single place. All right, so let me go back to the slide here. So first of all, many traders question is like what data I have to use. There are various types of data is available in the markets. One is level 1 data, level 2 data, level 3 and tick by tick data. Level 1 data is mostly used by data vendors. Most of the website providers also, they will be providing level 1 data only. And then level 2 data is generally provided by the brokers. Level 3 data is used by some of the premium brokers and some of the biggest algo trading firms as well. They will be using level 3 data. And tick by tick data, or we can also call it as a TBT data, which is generally used by the high frequency traders. Okay, so for order flow purpose, what we need is that the level 1 data itself more than enough to generate the order flow charts. If you're having level 2 or level 3 data, then it's well and good, you're going to get the same data. Nothing much is going to generate an impact over there. All right. So level 1 data provides only top one level from the order book. It provides the best bid, best ask, best bid quantity, ask quantity. Whereas level 2 data provides up to top 5 levels. When I say level 1, level 2, level 3, like all are nothing but limit orders only. However, we don't need these limit order levels to generate order flow. What we need is executed market orders. That is why level 1 itself more sufficient for that. However, if you're having a TBT data, your order flow quality of the order flow will be more supreme. However, the TBT data is very costlier these days. I think half a rack, you have to pay something like 25 lakhs or something per annum, and that is going to be a very costlier affair. But however, high frequency traders, they can visualize with the TBT data. You can see the complete order book. You can see where the players are keeping their stop loss, targets, everything you can see from using the TBT information. However, the amount of data which is generated by the TBT is very high, and let's leave it alone to the high frequency traders itself, right? So from the trading perspective, level 1 data is more than well and good. If you're having level 2 data also, you can generate order flow data. So here are some of the building blocks of order flow here. The bid and ask ladder, that is the most important one, which is what we call it as it looks like a ladder, and this is what we call it as an order flow block. The one which is executed on the buy side, we call it as an buy side and sell side combined put together, we call it as a bid and ask ladder. If there are 3 consecutive zones are there, so we call that as a stacked imbalance zones. Stacked imbalance zones are the zones where momentum is getting generated. So these kind of blocks, right? Whenever the blocks comparison is more than 10 times or 5 times, it shows in an thick green color blocks or thick red color blocks in case of sellers, right? So let me take some live examples here to understand what is a stacked imbalance. Maybe if I go to the stacked imbalance, bid and ask imbalance, you could see there are certain places, you could see some zones where it is highlighted in green color and certain zones which is highlighted in red color. Now, those are the zones where we compare diagonally, and we'll try to understand that whether it is more than 10 times to its neighbor bricks, if it is more than 10 times or 5 times. And that is more of a settings. If you go to the indicators, from the settings, you should be able to understand what is happening around here. All right. So if here is the setting block here, you can go and set the multipliers. For example, in this case, let's take a recent one which happened in the morning. Morning start of the candle, we had some momentum buyers who kept on pushing the price up. If you compare diagonally with this 10 to 104, 10 to 104, it is more than 10 times bigger, right? So compared to 0, 188 is almost infinite times bigger. And 0 to 83, it is infinite times bigger. So obviously, those will be coming under the momentum blocks. These are the momentum generated zones. Sometimes the momentum could generate in a subsequent manner. So those are stacked imbalance zones and highly critical when it comes to intraday trading. It provides tremendous intraday trading opportunities at times with ultra low risk trading opportunities, which anyways I'll be discussing in the Converge 2020 platform. I'm going to discuss about that. Then we are having an intraday volume profile, so which tracks the volume profile for that particular day alone, right? And inside the ladders, you're going to find that candlestick. It's a classical candlestick, nothing much different over there. And the most important thing is that you are going to get the delta candle, which talks about whether this candle is controlled by the buyers or it is controlled by the sellers. So let me go and show you the live uh, thing over here right now. So right now, since the morning, buyers have been in control continuously. Buyers are pushing the markets up almost for up to 940. The buyers are pushing the price up continuously. Even though if you could notice here, this candle is went down negative. The buyers totally control the candle, and then later sellers started occurring at the top. At the top, so some sellers they occurred and then they pushed the price down. Right, so it is tracked in the form of a metric called delta. Delta is nothing but always buyers minus sellers. So if I add all the buyers in this particular candle, so if I let me add all the buyers here. If I sum up all these buyers, so all these buyers, total buyers, and if I sum up all these sellers, we call this a total sellers. So delta is nothing but total buyers minus total sellers. That is what you can see it in the metric over here. There is a bottom, there is a table over there. That table tracks the delta, right? So in the delta, you'll be able to get that metric. So this is for the current bar. If I go to the current bar, you can see that the metric would be keep on doing what? The metric would be kept on fluctuating, but this metric will stay once the candle is finalized. For the current candle, the delta will be always changing because here I can bring the buyers and sellers as well. This is the buyers and sellers details. If you could see that the buyers and the sellers details will be keep on fluctuating, and so the delta is also fluctuating. So 85 is the current buyer and 86 is the 87 is the seller. So the net difference is gonna be the total activity here. You can see that the buyer is at the bottom and seller is the top, and 103 minus 112 is minus. It's going in minus. That means sellers are so far taking control in this block. In this block, sellers are more compared to the buyers. That is why the delta is going negative. And of course, there are a lot of variants are there. Delta shaded volume, volume histograms, and delta. So which I'll be using primarily, I'll be using bid and ask imbalance, and I'll be using delta most of the time. And the bid and ask is the default ladder, but I am very much fond of using bid and ask imbalance because I am a more of a user of a stacked momentum trader, predominantly to track the institutional unwinding or institutional positioning. If I want to know better, I prefer to use stacked momentum. So couple of along with that, a couple of strategies we'll be using on top of that to check whether a potential drop can happen or potential liquidation can happen. Now those kind of techniques we'll be using predominantly on most of the times with a very very high win rate. And coming back to the topic here, right? So here is the aggressive buyers and aggressive sellers on the left hand side. There is a one more building block here called high COT. It tracks the commitment of the buyer sellers if it is on the top, and the bottom we call it as a lower COT. COT stands for commitment of trades. This tracks the buying pressure and selling pressure in the markets. And there is one more block here called contract reversal. This is a buyer's contract reversal and this is a seller's contract reversal. Both the COT metric and contract reversal, what does it tracks is that it tracks how much pressure is there in the markets, how much effort the buyers are taking, or how much effort the sellers are tracking. All those metrics are in the formats of delta. So it is nothing but a derivative of delta, we can say like that. Now, next to that, what else we can see is that we can also see a plot. There is a box around here. Maybe I'll show you in the live charts. So you can go have a great feeling about that. You can see that there is a great thick red color box is surrounded. So those are the places where the bigger trading activity is happened inside that candle. That block adds sums up both the buyers and sellers activity, and it figures out where the highest activity is happening. Or maybe the better way is to go to the delta blocks. The delta blocks always shows the difference between the buyers minus sellers. So here also you will be able to see the blocks. And in case in fact every places you'll be able to see that in case of delta shaded volume, wherever the volume is the highest level, you can see those levels. So you can see that 738, this is the highest volume which is traded across anywhere else. So that block is highlighted. and the total volume transaction is very very high, which is nothing but the volume point of control. So volume point of control is plotted for each and every bar, or we can also call it as a volume point of control high volume node. So it is a high volume node, it is the volume point of control, and it is the place where the most of the volume transaction happened. That means put together of both buyers and sellers put together, the volume transaction was higher, means more liquidity got traded at those levels. But the buyers and sellers are able to find more liquidity at those levels for that particular 5-minute bar. You can also use order flow not only on a 5-minute time frame. You can also use something on a, you can use something like range bar charts. You can type 200 R and press enter. You will be able to limit the number of blocks as well. So here I'm just limiting to total number of 10 blocks here. When I say 10 blocks, I will be mostly measuring diagonally. So diagonally, if you compare, there'll be 10 blocks over here. And you could see that suddenly some 4,660 lots has been getting transacted over here. That means very good liquidity is getting transacted here by the sellers. If you are using the 5-minute chart, what you'll be seeing here is that you'll be able to see that you don't see that 4,000 lots of sellers which has been happened over here, but market has been doing what? Market has been going in a sideways mode for quite a long time now. For the last 4 bars it has been going sideways, and a certain particular point of time, right? So the buyers activity and sellers activity was quite high over here. Now, how we can combine with market profile is that using market profile, you can identify the direction, you can identify the market confidence, many things you can do with market profile. But if you want to fine tune your trading activity with market profile, then order flow is one of the better choice over here. So since the morning, what is happening? The buyers are the one who is mostly active. If you could see, very few places the sellers dominated. Rest of the places only delta is the one which is totally in control. So these are the places you can see the big delta over here. Big delta is something like if it is 750 plus delta value if you are reading. So generally I don't use the bid volume and ask volume. I'll be using the delta. So look at the big delta. Big delta candles are the where the biggest buyers dominated over here. Again, you can see that big deltas are coming in dominating over here. Big delta players are coming in, not much, but 632 is kind of a slightly a bigger volume, and bigger volume push is also happening. So big delta here and big volume push is also happening here. Same thing goes with now also big delta here. Delta is almost 700 plus, and some big volume buyers are coming and pushing the markets over here. Now these kind of markets, it's not a good idea to short unless there is some changes happening in the markets. It's better to go with the flow, or instead rather don't fight with them. If you want to fight, then you need to have a solid reason. That is what we call it as a market context. So what is the market context which is saying that you should go and fight with those buyers? As of now, buyers are there. They're coming really big. And how do I know whether I should go and compete or not? That is where the market context is there, which eventually I'll be going to talk about in the Converge 2020 session. There is also a preview webinar, pre-Converge webinar we are doing. Both me and Dean are doing to onboard traders and to help traders understand more about market profile and order flow. So Dean will be talking more on the market profile front, and I'm going to talk about more on the order flow front. So here, the strategies, whatever I'm going to speak over here are like, I'm going to talk about momentum reversal trading strategy, stacked imbalance strategy, R delta trend reversal strategy, COD failed breakout strategies. So various strategies I'm going to talk about over here. All these are intraday scalping strategies, and close to close, I'm going to talk about some 15 plus strategies I'm going to talk about in the entire Converge platform. Now, not only that, I'm also going to talk about 2 more special strategies this time. So one is order flow sweeping, and one more interesting strategies I'll be talking in Converge. So anyways, stay tuned. If you are not aware about Converge, right? Every time we try to bring new information about the order flow, And Converge is the one platform where you can learn anything about market profile and order flow, which is something new, or which is something interesting, or which is something which is really happening in the markets, and the real market understanding about the market itself. Now, in the order flow analytics, what I will be trying to visualize is that I'll be trying to visualize the market orders, how the market orders are coming into the markets, and visualization of the momentum orders, where big momentum orders are coming in. Right now, with the live markets, what we had seen, a lot of big orders has been coming in. So order flow also provides a very good visualization for big orders. Not only that, you can also visualize where the stop hunting is happening, where the momentum exhaustion is happening, right, where institutional orders are happening. And you can also use it to track iceberg orders. That is what we call as an trapped buyer, trapped seller kind of places, and which provides a very critical information for scalping point of view. And trapped buyer and trapped seller, along with that, if you are having a couple of strategies like R delta trading strategies, I'll be discussing about those R delta trading strategies as well. And high volatile exhaustion bars, delta divergence. So these are various concepts which are surrounding order flow. With the order flow, you can try to figure out where the smart money is positioning. Or see, smart money not only buy it, they also come and sell it also. When they are, how they are unwinding, before they are unwinding, there are a couple of patterns you can figure out in order flow. That's what we call as a smart money unwinding. You can easily figure out from the order flow technique. And just before the unwinding is about to happen, at what location the unwinding can happen and why it can happen, that kind of reasoning you should be able to give once you learned order flow. And high volatility and high liquidity. So those are the other parameters which we generally watch. If you see the liquidity flow in today's market, the today's liquidity flow from the buyer side is quite evident from the order flow. And there are a lot of metrics like delta is also, a lot of big deltas are coming and playing. Some bigger buyers are coming and pushing the markets up. So still that means if you want to short this market, you have to learn to wait. So nothing much to convey here. You can also use it as an tool to, let's say you're having some buy and sell models. And when there is a strategy is giving a buy or sell, obviously it doesn't has any context associated with your indicators. But with order flow, you can confirm whether it is a successful breakout or not so successful breakout, because order flow gives you the true environment of the buyers, how the buyers and sellers are getting positioned in the markets. And so these are the list of strategies I'm going to talk in the Converge 2020 as well. Along with that, two more extra strategies I want to discuss as well. So responsive breakout strategies, stacked momentum strategies, delta unwinding, delta absorption, breakout trade setups, zero momentum setups, then exhaustion setups, are delta trading strategies, trapped buyer or trapped seller, momentum reversal, momentum auction reversal, delta divergence. So especially delta divergence combined with exhaustion setups are one of my favorite trading strategies. And there are also COT based failed breakout strategies. We not only trade the successful breakout, we also go and trade the breakout failures as well. So where to trade the successful breakouts, where to trade the breakout failures, order flow provides a better example to that. And then there are other concepts like unfinished auction and uneven trades, especially how you have to position yourself. So these are the list of strategies I'm going to discuss here. Some of them are trending strategies, trend following strategies. That means we're going to follow the trend, we are going to follow the price. And some of them are mean reversion strategies, where we're going to go and trade against the current trend. So so these are the setups I'm going to discuss, and I can only guarantee you only one thing here. My session, I don't talk about motivation. I'm not a motivational speaker. I talk concepts. I talk about the reality of the markets. I talk about how you should trade, how you can control your risk, and how you should manage your trades. That is what I'm going to discuss in Converge 2020. What I don't do is that I don't talk about motivational talks. I don't talk about how big the money I had made. Right? I'm not going to talk about uh, like how you can be a successful trader. eventually, if you follow the rules, right, it's going to happen. All I can talk about is that how you can play with discipline, how you can control your risk, how you can increase your reward, and how under difficult situations how you should manage your trades. Now these are the data points I'm going to discuss along with the strategies, right? So anyways, I hate motivational talks. So that is my most of my talks. You can see that we talk only about the insights about the order flow. We get more detailed insights. All I can guarantee you is an institutional grade order flow analysis program in Converge 2020. All right. So if you have any questions, I can take questions. Otherwise, these are the foundational principles I'm also going to explain. Maybe starting from the previous session onwards, we'll be starting with the foundational principles, um, and also some of the basics of order flow. And in the actual conversation, we're going to talk about strategies, deeper insights, risk management, anything and everything you want to know about order flow. So Nagaraj is asking about what is COT. So COT is nothing but commitment of buyers and how committed the buyers are and how committed the sellers are. So basically, in a strong markets, right, the buyers' commitment are likely to be more, and some of the weaker market sellers' commitment will be more on the downside trading. It when a price is breaking out, we'll be using COT as a mechanism to determine whether the breakout is successful or not. When there are breakout failures, we again use COT to measure whether the COT is successful or not again. So COT is measured in terms of delta, and that is highly critical for determining the trend breakouts, whether it's a strong breakout or not a strong breakout. Especially when previous day high, previous day low, if it is breaking out, we'll be measuring the COT levels. Not at every time. Every time it doesn't makes any sense, but at a certain reference level, we will be measuring the COT levels. Right. So if you read bar by bar, you will be getting more of a confusion. So we have a techniques to measure where you should measure and where not likely to measure over here. So do I see COT at bar by bar? I don't. But when key reference levels are approaching, I'll be having my eyes on COT levels. And when key reference levels are breaking down also to determine whether that is a successful breakout or not, is a strong push is happening by the players or not, to determine that we'll be using COT. So COT talks about how much effort the buyers or sellers are making in the markets. So can this be applied for multiple stock specific? Of course, COT is an common terminology. It can be used for any stocks or even commodities as well, or currencies as well. You can go and use it. So Galaxy S6 Edge is asking, do I need to use order book together with order flow? No, generally, right, order book, it is not recommended to use order book. The reason is that 90% of the institutional orders are hidden. You cannot see those orders. In the previous session itself, we discussed, right? So in the previous session, I'm not sure if you had attended or not, but if you haven't attended, I would recommend you to go back and watch this section here. I guess if you had already attending the session, then probably you got access to this session as well, part 1 by Rajendran, where I discussed about the institutional traders' behavior. So where I said that 90% of the institutional orders are hidden. Even in the order book, you cannot spot them because mostly they are hidden orders. So I don't generally look into order book, right? So generally I'll be looking from the order flow perspective, because order book is 90% of the orders are hidden. So only 10% is what you're seeing is only the tip of the iceberg in the market order book. Anup is asking, can we see data for options trade the same way? Of course, you can use the order flow for options as well, but I don't use options data for order flow purpose. Reason is option is more of a derivative. Real buyers and sellers happen to be moving the markets on the future side. and options has to follow, right? It's not the other way around. Because options are moving, stock price will not increase. Stock price increases, options price increases, or stock price goes down and option price will move accordingly. Always it's good to know the underlying, or the underlying futures or underlying spot. These days spot and futures are inseparable. So spot moves the markets, spot moves the futures, and futures moves the spot. That's how these days it is. But it has never been like, because option players are moving and spot price increases, or because the spot price is, I mean, because the option price is moving down, because of that futures are moving. I don't think so, right? So spot can influence futures, futures can influence spot, but option price can never influence the future price or spot price. This is my opinion. I could be wrong, but from my 14 years of learning, I don't think option pricing alone can influence the futures price or spot price. Will you give any PDF or observation used with some theory to understand for beginners? Of course, I'm going to spot a lot of references. I'm going to spot, and yeah, if possible, I'll be getting you on PDF as well. But I'm not going to commit anything on the PDF at this point of time. All I can tell you is I can spot you a lot of resources where you can learn order flow from the scratch. And yeah, of course, the Bell TPO, right? They have a detailed documentation on order flow. That itself more than enough to help you about understanding the order flow, the basics, terminologies, everything. It is already there. If you ask me about that, get to know about the order flow terminologies, the tools, what is what, then you should refer the Bell TPO documentation. You can check with Vinod on that. COT and POC, is this the same? Am I correct? Of course, COT and POCs are two different things. POC stands for point of control, right? So it is more about where the equilibrium point is, where is the fair point of the trading activity for the day or for that particular bar. COT is more of a buyers and sellers effort. How much effort in that particular bar buyers are making, and how much effort the sellers are making. So it is a, uh, and as I said, it is a derivative of delta. Gaurav is asking, can you please explain difference between market and limit orders affects liquidity? So that's a very good question. Let me tell you, like, if you are seeing the limit order, let me go to the limit order slide here. So this is a limit order slide. You can see that they don't influence the current market price. They're just sitting idle. Limit orders are passive orders. They don't move the markets. So obviously, order book cannot move the markets, but they can control the velocity. However, market orders are the one which can influence the price. Let's say if I'm a buyer, imagine a condition here. I'm a buyer. I'm just punching. I'm a buyer here. I'm just punching 10 lots. Okay, 10 lots means I'm just punching 750 quantity. So if I'm a buyer, I have to go and get it from the seller. So this is buyer and this is the seller in case of order book. Whereas in case of order flow, you will be seeing the reverse scenario. Buyers will be on the right and sellers will be on the left. So if I'm a buyer, I have to get it from the sellers. And these are sell limit orders, which are pending limit orders. So here there is one quantity here, another two quantity, another two. So total four, and again and five quantity here, and then again four quantity over here. So one lot, again one lot here, two lots here, again five lots over here, one lot over here. Total put together it will come to 10 lots. So I am the one who will be pushing the price from, this is the current market price, from this price I'll be pushing the price to this particular price. So I move the price by 11,027.50 and 27.50. So I'm who is moving the markets here? I'm the one who is punching the market order. I'm the one who is moving the markets also. But at any given time, there will be buyer market order also, seller market orders also keep on coming into the markets. Who is more aggressive? That side markets will eventually move over a period of time. So it is like a kind of a tug of war between the market buy orders and market sell orders. However, what these limit orders they can do is that, let's say here, if there are 1,000 lots are pending here, means let's say this is a price, this is the last traded price. 1,000 lots are pending. I mean, 100 lots are pending over here. If somebody want to buy it, right? Let's call this level as 11,026.95. Buyers are coming and buying. If they are hitting this, like this is like a wall. If somebody is putting one lot, it will not. It cannot break up above. However, it can break. It cannot break up above because there is 100 lot sitting as a limit orders over there, and they cannot break up above unless they're consuming. Let's say they're consuming 10 lots here. They cannot pass through those levels. Again, some 20 lots are getting consumed over here. Buyers are hitting the wall, and selling limit orders are still pending at those levels. So let's say 30 orders here, again 10 orders here, again 40 orders over here. Next time only they can break it. Okay, because they could, what they are doing is that they're controlling the velocity of the price over here. Big players, they can control the velocity of the price. That's what generally institutions also sometimes they will do. They will create something called this. This is a kind of effect we call as a ceiling effect. They can control they cannot move the markets, but they can control the price by floating a limit order, kind of a liquidity zone. By providing a very strong liquidity, it is very, very difficult to surpass those levels. So that is where they create an intraday resistance. Now, those kind of things you can visualize using order flow as well. Now, these kind of players, buyers will keep on buying, but still delta will be keep on positive, and still market goes sideways. So that means some sort of an institutional supply is available at the top. I mean, kind of the institutions are supplying limit orders at the top, and they are not allowing the price to move beyond a certain level. But still, if you see the order flow, buyers will be keep on coming in every bar, and delta keeps on remaining high. All right, so that's how you can understand how the buyer limit orders and market orders behave. Let me move on to the next question. Anup is asking, smart money, their position in futures and cash differs at times. Your view. See, smart money, if their positioning at futures and cash is different at times. Yeah, I agree to that. I'm not denying that. However, the question what you have to ask is that from an intraday perspective, does it matter? Of course, it doesn't matters. It doesn't matters because all you want to know is that in many cases, like strong activity, like if it is Nifty, right, they don't have any choice, only Nifty. In that case, they have only futures. If it is in stocks, is it matter? Yes, sometimes it matters because sometimes they might be moving in cash market. At times, futures, the price could be reactionary. But what you cannot deny there is that when the momentum is there in the cash market, say similar momentum you are going to see in the futures as well. That itself, it's going to tell you that the smart money players are positioning around those levels. All right. So from an intraday perspective, what we will be tracking is that is the smart money, are they smart money in real time? Right. So some smart money like Rakesh Jhunjhunwala, we can call Rakesh Jhunjhunwala smart money, right? But still, we don't know. What we don't know is that whether he is smart money from the intraday perspective, or whether he is a smart money from the weekly perspective, or whether he is a smart money from 1 year perspective, we really don't know the time frame. But using the order flow, you want to track only the smart money from the intraday perspective only, because in your own time frame, if you are intraday trader, you want to track smart money from the intraday perspective. If you are an investor, you should track in smart money from the investing perspective, right? So first question is like, do you track the smart money from your own time frame? That is what you have to understand here. So if you are seeing a hourly charts, if you are seeing some smart money, are they smart money in the hourly time frame? That is the question, first question you ask, right? So then if you ask that question itself, then you will start thinking more about the markets, right? So then the real question comes, how I can track smart money from an intraday perspective, or an 1 or 2 days perspective, how I can track those details, what kind of knowledge I should have if I want to know about those smart money players. Then your idea about the markets expands. So that is one last question. I'm going to take it from Galaxy S6 Edge. In order flow in the future, when limit orders get filled, do these limit orders that get filled be considered as market orders? So I'll repeat the question again. In order flow in the future, when limit orders get filled, do these limit orders that get filled will be considered as market orders? See, of course, I know you might have a lot of queries on which orders in limit order will be considered as a market order. So I'm going to spot a small resource over here. There's something called IBKR. So IBKR, there's a website called Interactive Brokers. They provide details on limit on the market orders, the market orders. So they have a detailed execution about how a market order, how a limit order can execute like a market order. So those kind of information, you can find it in their portal. And there is one more thing. It's called marketable and non-marketable order. Marketable and non-marketable orders. So this will give you a brief guideline about probably this one, right? Add or remove liquidity. This block will help you to understand what is a marketable order and what is a non-marketable order. Sometimes you put a limit order, right? Let's say you're putting a limit order. Let's say the current market price is at 100 and you're putting a buy limit order. You're putting a buy limit order at 102. You know what will happen? This will execute like a market order and it will execute at 100 itself. So this is though you are putting a buy limit order, it will execute like a buy market order. Okay, it will not go to the order book at all. Instead, it will execute like it will execute at the best possible price itself. That's how exchange has been designed. This is more of a marketable order. Non-marketable order, they don't move the markets, they will add to the liquidity. Right. So non-marketable order, they adds to the liquidity. It means it goes to the sit in the order book. It goes and sits in the order book. So you have to go and study these examples. If you are placing buy limit order below the current market price, it is a non-marketable order. If you are placing the buy limit order above the market price, it is a non-marketable orders. As simple as that. It is a marketable order. It will execute like a market order if you are placing buy order. Same thing goes with the sell order also on the opposite side. All right. So I guess with this, let me stop the session here. If you have any questions, you can send a mail to either at support@convergemeet.com or even support@belltp.com or even support@marketcalls.in also. So see you soon in conversation and hope you learned something new. So whatever I thought here is basics, but however in Converge, what you're going to get here is the detailed insights about order flow, mostly actionable insights that you can use it and you can readily apply right from the day one onwards. You can start applying with order flow. Market profile, at least it needs some sort of digestion time to start with, but order flow, it's not like that. You can readily start with order flow trading strategies and you can start implementing from day one onwards. All right. Thank you and see you soon in Converge 2020. Thank you once again. Vinod, you have something to say? I guess Vinod is not here. So let me close the session. See you soon in the Converge 2020 again. Thank you once again.